Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to save a little money. My job is not just to entertain, but to teach, explain days like today. So call me 1-800-743-CNBC or tweet me at Jim Cramer. We've been very dismissive of this government shutdown on Wall Street. You know why? Because we've been through so many of them, they usually mean nothing to the stock market. Well, it turns out this one is different. The government's now been closed for 37 days with no sign whatsoever of the two parties even trying to reach an agreement. It's taking too darn long. At this point, it doesn't feel like a distraction anymore. In fact, when you look at today's selling, with the Dow sinking 399 points, S&P losing 1.12%, and the Nasdaq coming 1.90%. I put a lot of these losses on the shutdown, if only because we haven't been getting economic data from the government, so nobody knows what the heck is really happening. And when you get that, it starts to freeze decision-making, freeze the system. Now, we do have some pieces of information, but they aren't good. There's an employment service called Challenger Gray and Christmas, which puts out a monthly report on job cuts. It's authoritative. It's called the Challenger Report. Here's the headline. Quote, job cuts surpass 1 million. Highest October total since 2003. Companies cite cost cutting. AI in October. Holy cow. That crystallizes pretty much everything. Nasty. What else? There are two payroll processors, the ones that cut checks, ADP and Paychecks, along with a software company that helps manage employment, Paycom. Here are their hideous charts. These three charts, well, let me just say, they tell you the entire story of this economy, better than any numbers that come out of commerce or labor. Who the heck wants to hire people in this environment? Certainly not me. Others obviously agree, or these charts wouldn't be in the charnel house. In the end, the government shutdown is starting to hit home, as we learned today that the FAA is reducing air traffic by 10% at 40 different airports. Things have been slowing for weeks, but travel had held up pretty well. It was a bastion. That's probably the end of that, too. Now, we've been able to skate past the bear for the past few weeks. I don't think it's possible any longer. There are just too many negative headlines, including some that are impairing what I have called the year of magical investing. For this, I have to go to a tremendous picture from a report called Eye on the Market by Michael Semplis, chairman of market and investment strategy for JP Morgan Asset Management, and permit me, a good friend, that predicted what's happening almost to a T. Semplis had a vision back in September that we were about to be engulfed by what he called the data center blob. Now, I've been in sync with Semplis. You never want to go against the best strategists on Wall Street. That the data center theme was beginning to get out of control. The build-up so humongous that it's had a major impact on the economy, and until recently, that was pretty darn positive. But today, it felt like... Now, the blob's become increasingly menacing with the incredible expansion of an outfit that's not public. It's called OpenAI. It's a company that wants to use AI to take over the internet. They've made so many partnerships that they're on the hook for a fortune. OpenAI is committed to building hundreds of billions of dollars of data centers using Oracle as a partner. OpenAI remains extremely confident that they'll have enough money to build this stuff out. They're privately held. We don't know what their finances look like, so who knows? But I mean, maybe they can raise hundreds of billions of dollars. They decide to go public. That'd be terrific. While there's some skepticism about OpenAI, they've been so confident that most investors haven't feared the data center blob. And their partner, Oracle, needs to borrow a ton of money, too. They've already raised $18 billion in debt to build out what they can, and Wall Street's concerned about that amount, just because the insurance on the bonds Oracle sold has become very costly. Thank you, David Faber, for that story. They need 20 times what they've already raised to uphold their end of the blob. Still, the opportunity is so big that Wall Street's generally accepted OpenAI's ability to pull all this off and welcomed it until last night, when Sarah Friar, the well-known CFO of OpenAI, mentioned that the government could backstop the company in its data center build-out if needed. It seemed offhanded, but she quickly clarified that the company doesn't need any kind of bailout. It doesn't matter. Her reputation is so pristine that it's hard to walk back the term backstop, though. Why did she say it? She didn't mean it somehow. She's not a cavalier person. Given that this government has backstopped Intel when it got in trouble, and given that we've subtly been saying to ourselves that perhaps OpenAI has gotten too big to fail, it's hard to dismiss the backstop possibility out of hand, even if she hadn't mentioned it. Now the CEO, Sam Altman, talked today about how he expects OpenAI to end this year about a $20 billion revenue run rate, growing to hundreds of billions by 2030. Sounds promising. Also mentioned $1.4 trillion in commitments, but it's over the next 8 years. That's okay. OpenAI wants to be able to sell computing power like the incredibly lucrative Amazon Web Services. I like that. Again, I want to be assured that OpenAI is in terrific shape. But is it too late to contain the blob? That's all anyone's really talking about. They just didn't know what's called a blob. Now, we know that, as is so often the case, J.P. Morgan's Michael Sembles was pretty prescient here. The blob is growing too quickly. So when Sarah Friar made that backstop comment, it sobered us and made the whole market worry about the possibility that OpenAI may not be able to afford its ambitious plans. It either has to scale back, which is bad for every partner and every company in the data center food chain, or it may need government help, which is just awful for everything. Now, I think this market could actually handle the pressure of OpenAI because the other companies involved in the data center build-out are all rich, solvent, and I think prudent, even as we're growing tired of how much money they're spending. But the comments from Fryer could not have come at a worse time for all of the publicly traded stocks in the space, as they've been roaring for weeks, and now they ran into the proverbial buzzsaw. Just this Monday, Palantir, the revered but richly valued consulting company, reported a picture-perfect quarter, yet its stock went down anyway. That's a warning sign for any market. At the same time, the White House has decided to block the largest company on earth, NVIDIA, from selling its most sophisticated semiconductors to China. I know China isn't in the numbers, but some were disappointed, including me. I can't blame anyone for selling. We didn't. Palantir and NVIDIA are the faces of this bull market, though, and now they've been defaced. Today, we had a host of stocks that would have been unchanged or going higher, even if we weren't in this funk. Robinhood's a good example. Reported this very morning. The quarter looked darn good. The market didn't care for it at all. You know what? I'd actually say the same thing about DoorDash, which is spending a lot of money to become more dominant. People hated the quarter. That's become the norm since Palantir reported on Monday. It's like a switch has been flipped. And if the stock's highly valued like Palantir or Robinhood, then there's nothing it can do to satisfy Wall Street right now. So now let's put it all together. The regular economy is being crushed by the government shutdown and by worries about AI destroying jobs while causing higher energy prices. The data center economy may need some help from the government, which may or may not be forthcoming. And the high flyers, the speculatives, they're descending all too rapidly. That's the bear's melody. It's playing right now, though it may not be playing in a few days. Or it might get louder. But the bottom line, what matters is we need the darn government to go back to work. And we need the data center blob to be cordoned off from the rest of the economy. And we need some of the hottest stocks to continue to cool off further. Until then, we are indeed at the mercy of the headlines. And lately, the darn negative headlines are the only ones that anyone's paying attention to. Hey, let's go to Bill, Massachusetts. Hey, Bill.
Hi, Jim. You know me. I'm a friend of the club. I just wanted to say one thing. After meeting Jensen last month at a monthly meeting, he's such an honest man with such integrity. For him to come out and say what he said, I really appreciate him. I really do.
That was a great meeting, and Jensen is terrific, and he's created more wealth than anyone ever. I know that right now people are saying, oh, like Jensen, oh, geez, I don't want that stock. But you and I both know he's done an admirable job, and when he met our club members, I thought that was one of the greatest days of my life. How can I help you, Bill?
I feel great. The meeting was incredible. I wanted to pick up a little more Palo Alto after the way CrowdStrike is doing fantastically.
Look, I think it's good. I'm certainly not going to fight that. The stock is not that down from its high versus a lot of others. But I think that let's say the secular bull case for cybersecurity has never been better. And I love Nikesh's acquisition of CyberArk. That is just sensational. So there we are on the same page as Bill once again. Look, we need this shutdown to end, and we need the data center blob at least to stop engulfing the rest of the economy. Let's keep it where we're cording it off a little. Until then, we are indeed at the mercy of the headlines, and the headlines are bad. On Mad Money tonight, as we get deeper into football season, now how have the betting apps been faring? I'm finding out with the CEO of DraftKings, fresh off earnings and a big announcement with Disney. Then I'm sitting down with the CEO of Intuit to learn more about how this company is leveraging AI in a very tricky consumer environment. And I'm still curious about whether consumer staple stocks like Halion are a good place to hide out in this environment, like Kenvue was, if you caught it at the bottom. I'm talking to the CEO of the company behind Advil, Theraflu, and Tums. I'll also Sensodyne for another look at how the consumer's been faring. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.